stated.
Meantime, we're going to turn back to our focus on housing as well as the credit crunch. Want to take a look right now at one of the local housing markets, see what problems remain, whether there are any signs of a turnaround. And we want to specifically focus in on Florida because that's been one of the most hard-hit areas during the housing fallout. And what we're going to do right now is turn to Miami, bring in Grant Stern. Grant is a mortgage broker, also owner of Morningside Mortgage. It is a company based in Miami Beach. And Grant, thanks for joining us. We always like to get some on-the-ground perspective. Let me start off by getting that perspective from you. Florida, as I mentioned, has been one of the hardest hit. What are you seeing in your backyard? Any signs of a turnaround right now?
Absolutely there are, but they're still very initial. Right now we're getting a lot of first-time home buyers who are taking advantage of outstanding rates and still available programs from the agencies Fannie Mae and Freddie Mac. We're also starting to see some value buying going on by investors, and we're seeing some of the larger developers discount their product even when it's still selling to market to unload inventory and reduce their outstanding loan principal balances.
All right, Grant, let's focus in on the mortgage rates that you're talking about, and I want to hit specifically on what's happened with the credit crunch, which has been a lot of lenders disinclined or unable to put new loans out there, and also the fact that the rates have not come down in lockstep with how much the Federal Reserve has been lowering interest rates. So give us a sense now in terms of how many lenders you are seeing who are making mortgages truly available and how competitive the loans are, the rates are.
Well, there's a big division between agency rates and jumbo rates right now. The agency rates are still at very high spreads compared to their historic norms.
Let me just jump in here. By agency rates, just so we clarify, you're talking about here
agency would be Fannie Mae, Freddie Mac.
So below a loan smaller than a jumbo loan.
Right, the conforming loans, and that's not counting the stimulus conforming loans. These are the traditional conforming loan limits, loans under $417,000. Those rates are, by historic standards, pretty good. They're not the best they've been, but sometimes the fluctuations are extreme, and some borrowers can take advantage of that if their mortgage brokers are very active in following the rates. We've seen times where the rates fluctuate by as much as 1% in a day, which is highly unusual. However, there's a big difference in the jumbo market. It seems every day that passes in the jumbo market, the spreads get further and further out of control. Spreads being 400 and 500 and even 600 or 700 or 800 basis points above the corresponding treasuries. Right now, we're seeing 6-month and 12-month LIBOR ARMs being sold at a teaser rate of 12%, which is, outrageous. It's just a loan that no, decent borrower would take.
Grant, forgive me.
It's pushing jumbo borrowers to the sidelines.
I want to jump in and forgive me for stepping on your words there. Just that we have just about 35 seconds. So I want to know, as a broker, how hard is it for you to find lenders to actually make the loans for folks who are qualified who have a property to buy?
It's not so difficult in finding the lenders, but it's more difficult in fulfillment because there are fewer larger lenders handling incredibly large volumes, and every time one leaves, the next larger lender absorbs an even larger shock of volume. Like Washington Mutual leaving today is going to leave more on the plate for Wells Fargo, Citigroup, and Countrywide.
Grant, thanks so much for giving us the perspective, and sorry I cut you off there a moment ago, but really appreciate the insight. Thanks so much.
Thanks for having me, and have a great day.
All right, Paul Volcker, the former Fed chairman.